CSB Bank is on our radar now. Second quarter earnings have been arguably weak. Operating profit has been lower. Margins have seen perhaps a slightly bigger contraction than what was expected. Pralay Mondal is Managing Director and Chief Executive Officer at the bank. He's joining us now to take some questions. Pralay, good morning. Good to have you with us here. Prashant this side. We spoke to you at the beginning of the month when the business update came through. Has the NIM contraction been a little more than what you expected? And if you could explain what happened. Second, is this quarter what we've seen the bottom? And do you still maintain your guidance that NIM will be above 5% for the full year? Go on.
Good morning, Prashant, and happy Navaratri to you and your viewers. Yes, the NIM has been slightly muted, and obviously the cost of funds has slightly gone up for the entire banking system. So has been with us. Also, what happened last quarter was, I was just hearing about the gold prices, but in the end of last quarter, the gold prices are actually going down significantly. And right now, while the bond yields are going up, gold prices are also going up. But our prediction was we didn't know about this war that is going to take place. So given that, we had predicted that the gold prices will remain weak. That's why what we did is the higher LTV portfolio, we took it off our books, which are also higher yielding. And also when you take it off your books, there are certain outcome on the NIM. So that's why the NIM had gone down a little bit. Added to that, of course, the cost of fund increase which happened. But we are pretty confident that 4.84, which we have achieved this quarter, last quarter, this will be the bottom of the NIM cycle for us. And from here onwards, we'll pick it up.
Yeah, so you said that you're going to pick up the NIMs from here, and the 4.84 perhaps is the bottom. Got that. Mr. Mondal, good morning and thanks for being with us. Just wanted to understand, is there still some stress in the retail and the MSME or the SME segment? And if yes, because there was some decline that we saw quarter on quarter. If yes, where do we stand at as of now? And what is, the outlook that you have on credit costs?
See, our retail book has just started. We have grown by around 38% year on year. And SME also have grown by 22% year on year. And typically these businesses are seen year on year, not necessarily always quarter on quarter, especially for a bank like us. Given that perspective, obviously there is no stress possible because the portfolio is just building up, some of this portfolio. But we are taking a prudent call on the retail business because we are trying to ensure that most of the other challenges which could play out in the short term gives way, and then we pick up the business. That's what I told last time as well. On the NIM specifically, on the question of Prashant, Sonia, what I want to tell is we are already half-yearly basis around 5.12, and we will maintain our guidance of 5+ NIM for the whole of the quarter.
All right. Hi, Mr. Mondal. Good morning. So NIMs have bottomed out. That's good news. Give us a sense on asset quality. What could the credit cost be for the year? And what about slippages? I think they've gone up on a sequential basis. So what's the outlook out there?
See, credit cost actually has not gone up. If you look at it, our credit cost is 15 basis points negative. It's a negative credit cost. Now, it's too good to be true for every quarter and every year. So our broader guidance is GNPA less than 2% and NNPA less than 1%, and credit cost around 40 basis points till FY 2030. And as we are talking today, we are around 1.27 on GNPA, which is in line with what last quarter was. NNPA is around 34 basis points, which is in line with what last quarter was. And overall credit cost has actually gone down further to 15 basis points. But I'm not saying that's going to sustain. Credit cost will obviously become neutral to some positive, but not really eventful for us this year.
Okay. So can you tell us, the capital consumption in Q2 was on the higher side. What happened this time around, and will this run rate of capital consumption continue?
See, the capital for us, what happens is, in a way, it is good news because most of the businesses have started picking up. If you look at for the first time in the history of the bank, that all businesses, gold, SME, wholesale, and retail, all has shown a fairly good positive growth. Retail has grown by 38%, SME has grown by 22%. I'm talking about year on year. Gold has grown by 32%, and wholesale has grown by 17%. So from that perspective, I think some of these other businesses do consume little more capital. And as and when they grow, obviously some amount of capital cost will go up. Also, as we see that, in the end of the year, what happens is the entire profit comes into the capital accumulation, which doesn't happen quarter on quarter. Given that perspective, I think that's the impact we are seeing. But still, we are probably one of the highest CRAR ratio in the industry. So to that extent, we are quite comfortable.
Pralay, thank you very much for joining us, and good to hear that you're kind of sticking on to your guidance on NIM, etc., over 5% for the full year, and margins. More importantly, you think the worst is behind and things are bottoming out. Appreciate you joining in here on the program.